Profit reconciliations. Okay, topics only ever come up once, so another one of my this could be coming up this year moments. When it doesn't, don't blame me. Um, what I'm doing here is look at the reconciliation from actual to budgeted profit. Doesn't need to be, it could be either way, as long as you do it correctly. So the actual profit normally given to you, but if it wasn't, you do your total contribution, take away your fixed overheads. Budgeted profit would be total budgeted contribution, take away fixed overheads, and you might need to calculate that. So I might give you the figures to work out CPU, and then you go from there. If you look at the next question, it does that. And then what you do is you have your variances, and then you compare the actual to budgeted profit. So what we have is our direct material, that's saying total, but you could have the price and usage, labour, you could have the rate and efficiency. Because we're going from actual to budgeted, a favourable variance would reduce the budgeted profit because we've made more profit than we budgeted for, so we'd take it away. And an adverse would mean that our budgeted profit would be higher than actual. We'd add it back. Sometimes we prefer to do the budgeted to actual. It doesn't, like I say, it doesn't matter. It doesn't matter if it's sales or material, labour, whatever it would be the same. Then what you've got is the expected profit for actual production. That isn't necessarily something that has to be there, but just so you're aware it can. The key thing and where a lot of the marks is going to be is contribution gained or lost. So what we look at is the difference between the actual amount of units sold and the budgeted units sold, because the difference is the contribution gained or lost. If we sold more units than we thought, well, we're going to make more contribution than we budgeted for. If we have less, then we've made clearly less contribution than we budgeted for. And so more units would be a favourable variance, and we, in this instance, we would deduct that because our budgeted profit would be lower, whereas if it was an adverse variance, we've got less contribution, and we would add that back because our budgeted profit would be higher because it anticipated to sell more units. Got to be honest, quite often do it the other way, budgeted to actual. It doesn't matter. Just make sure that you remember that contribution gained or lost, because that's usually 2 or 3 marks in the question, and the one we're about to look at will show you. Okay, so this is the question A2, June 2022. The only time it's come up, question 14.2. If you want to give it a go, then come back and watch the rest of the video. Feel free. I'm just going to work through what you would do. So first thing, let's just highlight the information it's given you. So we're expected to make and sell 6,000 units, but we actually sold 5,500. That's going to be important in a moment. They've told you the selling price of £55 and the 2 direct costs, 18.20, 370. So our variable costs, if we take our direct costs from our selling price, we're going to get our CPU or contribution per unit of £33.30. So get us a mark in itself. We've been told the actual profit, so we're not going to gain much for that. We've got the sales price favorable, we've got our material adverse, we've got our labor favorable. I've not highlighted sales volume. Sales volume not in the profit reconciliation. As we said on the previous slide, we'll look at the gained or lost contribution, because if we sold more units, which is what would happen with volume if it was favorable, but it's adverse. We sold less units, we've lost contribution. The revenue, yes, but obviously that's not what we've lost, because we've also had to spend money to produce those products. We're not going to lose all of that, but we are going to lose the contribution. What we need to do is prepare a statement reconciling the actual profit with the budgeted profit for 6,000 units for product B for May 2022. Let's have a look on the next slide how it can be laid out. So the actual profit, no surprises here, isn't, like we said before, isn't going to get you a mark because they told you it. The direct material total variance, so 3,025, we're going to add that back. That was adverse, so the budgeted profit would be higher because of that, and we're going to take away the 2 favorable variances because budgeted profit would have been lower because of those. Now the 16,650, so the lost contribution, it's 2 marks. Like we said, it could be a couple marks, it could be more depending on how they put it together. First mark is for calculating CPU, so contribution per unit of 33.30. Then we sold 5,500 units, but budgeted to sell 6,000, so that's 500 less than budget. So that's 16,650. If we add it back to get to budget profit, because we lost it, so budgeted profit was higher than we thought, because we thought we were going to sell more units than that. If we flipped it, if we went from budget to action, we'd obviously be different. We lost contribution. But if we treated it wrong, we only get 1 mark. Or if we've got the figure, it's not the reconciliation, we're only going to get 1 mark. We've shown we need to do it, we just don't know how to deal with it. It would be a shame, but you're still going to get some credit. The budgeted profit, 151,800. That's a balancing figure, but you could also calculate it. So that 3330 multiplied by the 6,000 units, take away the fixed overheads, will give you your budgeted profit of 151,800. So if the actual profit is not used, then the maximum amount you can gain is 5. Why wouldn't you do it? It tells you go from actual to budget. Sometimes you forget, so read that question carefully. And don't just list the variances. Don't just say the favourable or adverse. Make it clear to the examiner you're adding or taking away. Yes, if budget and actual is right, you're going to get the marks, but you might make a mistake. And too many students don't do it. Nothing. They're awkward, but could come up. Practice them. Good luck.